Good evening, everyone. Welcome back to the auditing class. We are on the last lecture of our chapter 9. I hope you are all doing well and you are studying regularly and revising regularly. So now sit straight with books in your hands, with notebooks in your hands, with pens in your hands, and some water in your hands, and get ready for the next 2.5 hours of some really fun topics in the auditing and chapter 9, different types of entities. So quickly just send a hi and just let me know that you are here. Good evening, Navneet. Good evening, Adil. Good evening, Pooja. Good evening, Mr. Linga. Good evening, Chandana. Good evening, Pooja B. So all of you are here. Good evening, Tanu. So let's get started. Are you all ready? So I hope you studied previously. Whatever has been done till now, you have studied at home. I hope so. Okay. So today we'll be doing an absolutely new topic first, that is audit of cooperative societies. Okay, let's start. As usual, first I will explain everything and then we will see the book. Okay. So first to start, let's imagine something. Okay. Let's imagine you are someone who likes organic food. So you are someone who believes that I don't want to eat the food, the wheat, the rice from the market. I am someone who enjoys only organic food, which is grown without pesticides and other insecticides. But you find it very expensive to go to the store and buy that food. So you find other people who are like you. So you find many other people, they all like organic food. All of you like organic food. Now you all want to make organic food easily affordable for all of you. Okay, so you have found like 50, 100 people and you want to source organic food. Now you're saying if there is any middleman, okay, if there is any middleman, let's eliminate this middleman. Okay, let's eliminate this middleman and let's directly go to farmers. Okay, so suppose one of you do your research and you come to know there are farmers in Idiki who are developing organic spices. Okay, so you go to the farmer, but farmers are saying that I cannot sell you 1 kg, 2 kg. You can buy a 100 kg bundle from me. Okay, you can buy a 100 kg bundle. I cannot sell you 1 kg, 2 kg. So you say, okay, I will collect more members and we will all cooperate with each other and have unity with each other, and we will directly source this 100 kg of organic food for us. Now when you buy for 100 kg and there is no middleman, of course you are getting at quite reasonable price, and you distribute it among sell to your members. Now, these people think, oh, we are doing quite well. More and more people are getting interested in us. So let's create this legally. And we create something called as cooperative society, which means the purpose is that let's cooperate with each other, create unity, and take benefit of that unity by eliminating the middleman. So what slowly they start doing? They create an organic store. And now anyone who becomes a member can get and purchase all the organic products from the store. And where is the store getting all the products from? Slowly they have created contacts with many farmers from whom they are getting all the products. This is how a cooperative society functions, and that is the philosophy behind cooperative society. Now you tell me that whether the purpose of a cooperative society is to maximize profits or maximize benefits to members. What is the purpose of this cooperative society? Whether they want to maximize benefits to members or to maximize profits. But will they still have some profit? will the cooperative society will still have some profit? Can it still have some profit, this cooperative? Why does it need profit? Why does it need some profit? Why does it sell from the stores at a little bit of markup? To operate. Very good. So the purpose of profit is to run the cooperative society. You have to pay registration cost. You have to do transportation. You have to maybe have an accountant who will do all the work. You have to get audit done. So you have to pay to the auditor. So for the operation of the cooperative, you definitely need to have some profit. But the purpose of selling is not to have profit, but to give benefit to the members. Okay. So the benefit is how? Suppose 1 kg of pulses or 1 kg of cardamom would have costed from the middleman, it would have costed 4,000 rupees. But because of the cooperative, 1 kg of cardamom is, let's say, costing 2,500 or 3,000 rupees. So that is the benefit you are deriving, and you can add a little bit of markup to ensure that the society does not endanger its solvency. So you don't have to put its solvency in danger. You can add some price and sell it. Everyone is absolutely clear with the concept of cooperative? Absolutely clear with the concept of the cooperatives? Perfectly clear? Okay. So what happens in a cooperative society? It actively prevents anyone from becoming majority or someone who is ruling it. It tries that no one becomes a minority shareholder, and it creates a balance and restriction on the shareholding. And all of these things we are going to study today. Okay. So let's first understand who governs a cooperative society. So cooperative society is governed by Cooperative Societies Act 1912. Okay. Cooperative Societies Act is governed by Cooperative Society Act 1912. Sometimes in the book, you will also see it referred as Central Act. Now, why is it called Central Act? Because state may have their own acts. Okay. State can have their own acts, own rules, own laws, that how a cooperative will be run in their state as per the situation of that state. Okay. So Cooperative Society Act exists as a central act. However, many states actually have it. States like Maharashtra, Orissa, West Bengal, all of these states have their own cooperative acts. So they run their own way of, they have their own rules, own regulations, but just like Trust and Societies Act, okay? So here the purpose can be that there can be a central act, but there can be individual state acts also. Now, let's talk about some technical part, okay? Let's talk about who can be an auditor. Who can be an auditor? So, first is very clear that, of course, a chartered accountant can be an auditor. So, a CA under CA Act 1949 can be a auditor for a cooperative society. But there are some states that allow other people also to be auditor. So some states have permitted people like who are holding government diploma in cooperative accounts or diploma in cooperation and accountancy. State can have different names for it, okay? Cooperation and accountancy. And other than that, there can be someone who has previously been served as auditor in cooperative department of government. So if you have been like an internal auditor, any such authority, you can be a part of this. Society and cooperative society is not same. Of course not same. For society, I taught you Societies Registration Act, which is a form of an NGO. It is for public welfare. Cooperative society can run businesses. They can earn profits. They can distribute profits. Is that clear? So even someone, Amul is not a society. Amul is a cooperative society registered in Gujarat. Anand. Okay, Amul is a cooperative society. Is that clear, Kuldeep? Can I move ahead? So, who can be an auditor? Of course, a CA under CA Act 1949 can be an auditor, plus someone who is holding government diploma with cooperation in accounts or cooperation in accountancy, or someone who has served as auditor in cooperative department of the government. They can also be an auditor. But who appoints them? So, who appoints them? So, like in companies, you have registrar. Many cooperative societies are there. If you look around in your city, you might find cooperative banks also. Okay. So, for example, in Surat, there was Surat District Cooperative Bank, Surat People's District Cooperative Bank. So, like that, like Ahmedabad had Kalupur Bank. So, each of your city will have some or the other forms. You will find cooperative housing societies also, cooperative credit societies also. Credit society basically rotates loans amongst each other. So depends on the state rule and law that what kind of activities are permitted. Is that clear? So who appoints the auditor? So just like in company, you have an ROC, registrar of companies. Same way, in cooperative society, you have registrar of cooperative societies. So who appoints the auditor? Registrar of cooperative societies. Okay. So audit report is also submitted to them. Is submitted to society plus registrar. Okay, but who pays the fees? Who do you think pays the audit fees? But who pays the fees? Who do you think pays the audit fees? Tell me quickly. Cooperative society. But who decides the fees? Who decides what fees needs to be paid? Who decides what fees needs to be paid? Registrar. Very good. So who pays the fees? Cooperative society. Who decides the fees? Who decides the fees? Registrar. So registrar creates a scale, and on the basis of that, the fees is given. Till now, here it's clear. Now, okay. So we know who can be an auditor. We know who appoints the auditor, how is the fees paid, all that we know. But what do audit? What books to maintain? Books, accounts. What books, accounts to maintain? So here it is mentioned that state government can frame rules. State government can frame the rules. Okay. So state government can frame their own rules that what accounts needs to be kept. But in general, there are three main things that needs to be covered by any books. What are those things? In general, things are amount of money received and spended That should be clear from the books of accounts, means receipts and expenditure. Next, sales and purchases should be clear. Assets and liabilities should be clear. Whatever books you make, at least these three things should be fully covered: receipts and expenditure, sales and purchase, assets and liabilities. So, and whether it is any government, they would try this. So this has been prescribed by Maharashtra government that this much needs to be there. Okay. Now, I'll give you some example of what extra registers can be maintained. Extra registers that can be maintained. So the registers that can be maintained is daily cash sales summary register. And if there is cash sales, there will be what? Credit sales. So some are cash sales, some are credit sales. So there should be debtors register that has daily report of the collections. Okay. So that register should be maintained. Then same way, there should be recovery of loans register. Recovery of loans. And if there is recovery, there should also be a register of how many loans given. So loans disbursement register. Loans disbursement register and any other. Depending on what kind of society you are running, you can of course maintain more things. These are just examples. So the registers other than books of accounts can also be maintained. All of you are writing this register. It is registrar. Okay. Don't write register. Adil Tanu, the registrar. Okay. Jaldi mein you might have written. So the registers that can be maintained are daily cash sales summary register, debtors collection register, recovery of loans register, loan disbursement register, and any other. So this is basics about what kind of books of accounts are expected from a cooperative society. Some state sometimes also allows the books to be maintained in vernacular language, means local language, local regional language. So it really depends on the state rules that what exactly will be maintained, how will be maintained, and how to sort of which language you need to maintain it in. Now, the most important thing that I told you about was that no one can become the owner of a cooperative society. No one can become like 90% shareholder, or no one can fully control. So that is why there is restriction on shareholdings. Now this point you please remember properly for exam, for MCQ. Okay. Restriction on shareholding. Remember this. So let's say that first I'm giving you an example. Let's say there are 500 shares. Not 500. Yeah, 500 is okay. So let's suppose there are 500 shares. Okay. And you can hold up to 20% of it. What is 20% of 500? You can hold up to 100 shares. Okay. So the restriction is 20%. So you can hold up until 20% of the shares. But let's say each share value is rupees 20. So how much is the share value? 100 into 20. How much does it become? 2000 becomes your share value. But then there is second restriction, not exceeding rupees 1000. Understood, everyone? So what is the shareholding restriction? You can hold up until 20% of the share, total number of shares, subject to it is not exceeding rupees 1000 of the value of shareholding. Everyone clear? So you can hold maximum, I'll just write it in different color. maximum of 20% of total number of shares or value of rupees 1000. Everyone clear? What if, let's take another example. What if the value was, let's say, 5 rupees? So 100 into 5. So 500. Now can I hold 100 shares? Now can I hold 100 shares? Yes. Simple. All this maths and all you won't get in this exam, but just for the clarity. Okay. You should just know this part. Maximum 20% of total number of shares or value of rupees 1000. Everyone clear? Okay. Now, can state act have their own limits? Can state act have their own limits? Yes. So this I am telling you that this is given in the central act. But state act can have more restrictions also. Okay. Ma'am, please repeat it. Okay, Sham Sundar, just pay attention. So I told you that cooperative societies, no one can become the king of a cooperative society. No one can become an owner. So that is restriction and how much one person can hold. Okay. So how much one person can hold is you can hold either maximum of 20% of total number of shares or value of 1000 rupees, of course, whichever is lower. Okay. But that word is not given. So I don't want you to write that in exam. That's why I'm not using that word. Okay. But logically, it means that if you are choosing 20% shares and the value is exceeding 1000 rupees, then you have to restrict the shareholding to 1000 rupees. Everyone clear? So either 20% of the total shares subject to that 1000 rupees should be done. Registrar is not same as Companies Act. I'm saying like Companies Act has registrar of companies, the same way the Cooperative Act has registrar of cooperative society. Everyone clear? So registrar of cooperative society. So like Companies has registrar of companies, here we have registrar of cooperative society. Done? Can I move on to next? Very easy. You can gain a lot of marks in this part. Okay. Sure. Next. Next, let's come to loans. So the whole purpose of a cooperative society is to benefit its members. So logically, you tell me, can cooperative society give loans to anyone and everyone or only its members? Think logically and tell me. Think logically and tell me. Members only, ma'am. Of course. Good, Adil. So, very simple that a registered society shall not give loan to any person other than member. But now, second question to you. Can one society give loan to another registered society? Can one society give loan to another registered society? Yes. One registered society can give loan to another registered society. But do you think we need permission? Here comes special sanction by registrar. You need a special sanction by registrar. Okay. So you can give loans to the members, and of course you have to follow your bylaws. Like a company has MOA, AOA. cooperative society has rules and regulations and bylaws. So you can give loans as per the bylaws of your society, but you can give to your members. And one registered society can give loan to another registered society subject to special sanction by the registrar. Now, this is given by Central Act. Again, can state act have more restrictions, can have added restrictions as per their own state law? Can there be more restrictions as they deem fit? Yes. So what we are studying is only Central Act because we can't study each and every state's act. So we are studying in general Central Act, but the state acts can be different in different states. That is why after you become CA and if you are interested in getting to know cooperative society more, you can do post qualification certificate courses on cooperative society, right? So if you are interested, but here you get an idea about cooperative societies. So this is done. Now let's talk about borrowings. Let's talk about borrowings. So suppose I am running a cooperative society. We saw this per people, na? They started to run an organic cooperative store. Okay. Now they are growing very fast and they are getting demand to open these stores at multiple locations in the city. Okay. So now these people want to go to a bank to get money. Can they go to a bank? Can they go to anyone to borrow money? Can these cooperative societies go to other people to borrow money? Yes. Okay. Yes. But of course, what rules you have to follow? You have to follow as per the bylaws. So you have to see what are your own bylaws of the society. As per that, we can examine and see that you can take loans. Okay. But there is no specific central act restriction that you absolutely cannot borrow from the other people other than members or cooperative society. Then how will you grow? Okay. So borrowings is done. Now, suppose loans you have given, borrowings you have taken, your society is running very well. This organic society, organic store is running very well. You have opened 50 stores in the country or in the state. Now you have excess money. Bylaws means is not the right word. It is similar. So like a trust has a trust deed, like a company has a MOA, AOA, like a partnership has partnership deed. Same way, the primary documents, the constitution documents of a cooperative societies are called as bylaws. Is that clear? Okay. So borrowings are done. Now, since we have grown so much, we can have excess money. So next comes where to keep that money. Investment of funds. Here you have to remember the section number, section 32 of the Central Act. Remember the section number. So here you have to remember that, see, cooperative money does not belong to anyone. It belongs to the whole cooperative society. It belongs to all the members. So there should be restriction where you can put that money so that it is not into very risky investments so that the money might get lost. Okay, so you have to be very careful. So what kind of investments can you do? Very simple, pay attention. You can invest in central or state cooperative bank. You can invest in any central. So you can invest in central or state cooperative bank. Next, you can invest in any other cooperative bank if it is approved by registrar. If it is approved by registrar. So if there is any other cooperative bank, there also you can invest subject to it's approved by the registrar. Next, you can invest in securities that is allowed to Indian Trust Act 1882 in section 20. सो जहां जहां पे ट्रस्ट वाले इन्वेस्ट कर सकते हैं वहां वहां मैं भी इन्वेस्ट कर सकती हूँ. सो wherever trust can invest, cooperative can also invest. So securities allowed to invest or securities specified under section 20 of Indian Trust Act 1882. Next, where can I invest? I can invest in shares, securities, bonds, or debentures of other society. Okay? You can invest in shares, security, bonds, and debentures of other registered societies with limited liability. Okay, so there all also you can invest. And last, you can invest in any other money which is permitted by central government or state government. All right. So where all can we invest? Let's see this answer. This can come in theory for 4 marks. Please pay attention. So where can a cooperative society invest its funds? They can invest as per the section 32 of the Central Act. Central Act means Cooperative Societies Act 1912. Where all can they invest? In central or state cooperative bank, in any other cooperative bank which is approved by registrar, in securities which are specified under section 20 of the Indian Trust Act 1882, shares, debentures, bonds, securities of any other registered society, or any other money where it is permitted by the central government or state government. Everyone clear? Any doubt till now? Any doubt till now? Can I move ahead? Okay. Okay. Good. Next, appropriation of profits. Where all can you? Ma'am, may I know the reason behind for showing lots of concern? So you are not allowed to invest in equity or high risk areas of private companies. So Anil, for example, these people, the purpose is not to grow the money, but it is to improve the benefit of the society, right? You cannot do that. So what it requires is the money whichever has been earned is through the contribution of the members only. So you can only, just because you can't keep it idle, you don't want to keep it idle, you are keeping in safe things so that it can grow at 3%, 4%, 6%. That's it. But the purpose is not to make income out of it. So basically they are low risk investments where the purpose is not to multiply the money, but the purpose is to keep money safe. Okay. Next question. Ma'am, can the state law supersede the central law and remove restrictions? So everywhere where you study the Central Act, if we actually study it, the raw language simply says, the Bare Act simply says, the state may put more restrictions. The state may put more details. So by the reading of it, it's quite clear that they allow the state to make it more strict and not make it more loose. So that is the reading of the Bare Act. So wherever we study the Central Act, Bare Act, everywhere they mention that the State Act may impose its own restrictions, impose its own issues. So from the reading of it, from what I understand, is that it cannot supersede in terms of disallowing everything. You cannot take away the what cooperative society means and say that there are no restrictions on shareholdings. That essence cannot be taken away. So what happens is Central Act becomes like a base guideline and the state works on top of that. Is that clear? Who asked the question? Is it clear? Pranav? Clear, ma'am? Okay, good. Now, appropriation of profits. Appropriation of profit, it is mentioned in the Central Act that a prescribed percentage, okay? A prescribed percentage of profit should transfer to reserve funds before distribution to members. So if you're doing any distribution to members before that, the states can have different percentages. Okay, that's why the percentage is not given in the Central Act. So states can prescribe different percentages that how much should be transferred to the reserve funds. So a prescribed percentage of profit should be transferred to reserve funds before any distribution to the members is made. That's it. Next, contribution to charitable purpose. So suppose you are running a cooperative society and you want to give money to some old age home, some orphanage, you want to donate to some NGO. So here also you are not getting complete freedom to do that. So what is the restriction here? That you can have sanction by registrar. You have to take permission of registrar to do what? To contribute, that too not exceeding 10% of net profits after transfer to reserve fund. So how much can you transfer? How much you can transfer? Firstly, you cannot transfer anything without the permission of the registrar. And even after getting the permission of the registrar, how much can you contribute? Maximum of 10% of net profits after transfer to the reserve fund. Okay? Everyone clear? Everyone clear? Okay. Contribution to charitable purpose. Done. Next. What to do if the investment, if reserve fund money has become very high? There's lot of money in our reserve fund. Our society is like, is it mandatory to contribute? No. This is optional. If you want to contribute, then you have, that is why there is restriction. Na? If it is mandatory, then you have to do it. Here, if you want to do it, you have to take permission from the registrar. Okay. Now, suppose our organic society is working very well. We have been working for 20 years and our reserve fund has gotten accumulated because there is like compulsory reserve funds every year. So our reserve fund money is just lying there, no use of it. So what can we do with the reserve fund money? What to do with it? So there are three things that can be allowed by state government, okay? Some state acts allow following things. What can you do with the money? First, you can use in the business of society. So to grow your own society, you can remove the money. Okay. So you can use even as working capital. But of course, you have to follow your own bylaws, your own rules before you can use this money. So you can use, then you can invest as per provisions. So we studied this thing. So here also you can invest the money from the reserve fund. So you can invest as per the provisions, or it can be used for public purpose to promote the object of the society. To promote the object of the society. What does this mean? So, I want more people to learn about the benefits of organic food. Okay. So, for that, I am organizing a seminar in a big auditorium and I am telling people to come to my seminar of 2 hours. For that, I've created a nice kits, I've created banners, I have called speakers and doctors to tell the benefits of organic eating. I have given them lunch. So, for that, I need to spend money. I'm doing a seminar on importance of organic food. So, if I'm doing such things to promote the object of the society itself, any public event, but it is promoting the object of the society, then also you can use your reserve fund. Everyone clear? Everyone is clear? So this also very important answer. All these things can come as small MCQs and small questions. Now, contribution to education fund. Contribution to education fund. So only some states have the requirement that they should contribute annually at a prescribed percentage to contribute annually to a prescribed percentage to education fund. Okay, at appropriate rate. At appropriate rate. It is a charge against profit. It is a charge against profit. Okay, let's see the question. Ma'am, how will the decision making work out? Like any committee? Yes, same. Like a committee only. So, all of you have experienced a housing society. Are you living in a community where there are bungalows or there are flats? Bungalows and flats and all that? Yeah. So, there are expenses to run a society. You have to incur expenses to run your residential society. Lift expense, electricity expense, watchman expense, cleaning expenses, right? So for that, all of you contribute something called as maintenance. Yes or no? Contribute maintenance. And a managing committee, someone is president, someone is secretary. Same way in societies also function. So they keep rotating different people as managing committee who manage the daily workings of the cooperative society. Is everyone clear? How they elect that managing committee will be as per the bylaws. Okay. Right now we are only focusing, the book is only focusing on the auditor part. Everyone clear? So that's it. So here we have completed, if you see the book, I have covered everything from the book about special points about cooperative society. So if you look here, see it exactly ended at the same place. Okay. Contribution to education fund. Okay. So if you'll see, everything has been covered, nothing has been left. So here it starts, following points to be kept in mind. The above topic is mostly to give you a background, but here is where your main points start. That is following points to be kept in mind. But this does not come as a single answer. That is why I'm not giving you any single flow chart. They cannot ask you like simple that give all the points of cooperative society. It doesn't happen like that. So each thing is an individual answer. Everyone clear? So qualification, this small flow chart. Who appoints the small details? Okay. So each thing can be a question. Everyone clear? Restriction on shareholding can be one question, or investment of funds can be one question, or contribution to charitable purpose can be one question. So like this, you need to know. Done? Special points done. Can I move on to the next? With your permission, can I move on to the next? All right. Okay. So the next topic. Is it easy or it's very hard? Is it easy or it's hard? Do you think you can get full marks in this? If you do it properly, if you write the answer properly, you can get full marks. Okay. If it's a 4 marks answer, you can get full 4 marks if you write correctly. So this is fully a cash cow. What is cash cow? Something that gets easy returns, quick returns. Okay. So let's go on to next. So you're studying more like law today instead of audit. We are doing more like law instead of audit. Okay. So let's come to special features of cooperative audit. Now we start audit. So let's start. Features of a cooperative audit. Now here is where I have to pay attention as an auditor. So imagine this, that it is like a checklist, that if by God's grace, many of you after articleship get experience in cooperative audit, or after practice you get interested, then what is my template? Where do I start and what points do I focus on? So think of these as the main primary things that we have to focus on when we are doing cooperative audit. Okay. The first thing is you have to examine overdue debts, because this is the reason most of the cooperative societies fail. What happens is, you must have seen in your buildings, what is the main reason that buildings maintenance becomes bad? The wall is not good, there are all the color is coming out. What is the reason this happens? What is the main reason that societies no maintenance paid, overdues? Because it's very difficult to recover. Same way in cooperative societies, all of you are each other's members. No one is bigger than each other. Okay. No one can force another. No one is a minority. No one is a majority. So that's why one of the most important area for me as an auditor, if I go to a cooperative society, is to check overdue debts. Here, as an auditor, we will classify debts into 6 months to 5 years and more than 5 years. So as an auditor, first you have to do very important thing, that overdue debts will be classified from 6 months to 5 years and more than 5 years, especially if you are running a credit society. Credit society can be, for example, I told you an example called as teachers credit society. So all the government teachers may come together to help each other out in case of any financial crisis or short-term money requirements. And then they give loans to each other, and sometimes you don't get it back. Even in this stores, kirana stores, cooperative kirana stores, members can say that we will not pay each time we buy something. We will clear our dues once in a month. So some members keep buying things and then they don't pay at the end of the month, and there can be an overdue because of that. So it is very important to check, because it affects working capital position. It affects working capital position in a society. What will happen? That you have to then classify, you have to see whether they are good debts or whether some have become bad debts. Then if it has become bad, you have to see whether correct provision is done or not for bad and doubtful debts. So as an auditor, it becomes very important that you start by checking all the overdue debts. Everyone clear? So I'll move on to the next point. So overdue interest. Overdue interest. What does this mean? So I'll just give you a small example. Suppose I have taken certain loan from a credit society, and each month, let's say every 5th of the month, on 5th May, I was supposed to pay them 12,000 rupees. This 12,000 has principal plus interest. So the system, usually the accounting system, is that the income has become accrued on 5th May. So the system will recognize the interest and principal. Now suppose 90 days have passed. Let's say 3 months have passed. So in May, June, July, August. Okay, so 3 months have passed. So after that, this interest needs to be reversed. Needs to be reversed if still overdue. So what becomes an auditor's job is to see that wherever there are overdue debts and the accrued interest was put in the P&L as income, that should be reversed and it should not be recognized as the society's income. And you should create overdue interest reserve. Okay. So this should be reversed and this should be created. Everyone clear? So it reduces from the interest account and it goes to the overdue interest reserve. So if and when the money comes back, it will again be reversed and put in the P&L account. Everyone clear? Interest account. So as an auditor, I just have to see that whether reversal of the interest on the overdue debts has been correctly done. No, I am giving you 90 days as an example. Each state can have its own policy. This is just an example. Each state can have its own policy. I told 90 days because this is kind of a standard measurement in many places. So I just gave you that example. So overdue interest is done. Next is very, very interesting. Okay. This used to be, and still in some places, is one of the very popular method of committing fraud. So you should know how to prevent it. Only interest portion. Yes, Anil. So I'll tell you how this fraud was done and where the intervention started. So let's imagine a situation. Okay. Suppose you want loan. I'll just do this in different color. Suppose you want loan. So you enhance your sales. Okay. Enhance your sales. So you want to get good amount of loan. For that, you enhance sales. You put fake bills. Fake bills are put in it. And you are showing them as credit sales. So no money has come in. You have just shown them as credit sales. So you got loan. Suppose you got loan in 2020. So that time you increased your sales and did this process. Now suppose it's 2024. What you say, these same credit sales have become bad debts. You tell these people are not giving me money only. These people have ran away. Their address is bogus and all that. And then you charge it to profits. So in P&L, you reduce the bad debts amount. Okay. Now, do you think the companies, the cooperative society should just be allowed to certify anyone as? Do you think it should be easy to show anyone as bad debts or it should be a proper process? Should control. So here comes the next point. Certification of bad debts. So in many states, it is said that it should be certified by auditor of cooperative society. If not, then by managing committee. Like Maharashtra Act tells specifically that the auditor of a cooperative society can only certify bad debts if auditor is convinced that this bad debt is correctly bad debt, then only you can pass the entry. But if some state does not have this provision, then still managing committee's approval is needed for any bad debt to be certified as bad debt. Everyone clear? So this is one important audit point. Clear? So I'm moving on to next. Next is valuation of assets and liabilities. Next important audit areas is valuation of asset liability. First, I would tell you very clearly, no specific provisions. There are no specific provisions under any act which specifically tells how to check valuation. But it is in general important. In general, auditor needs to check existence, ownership, and valuation. In general, you need to check these things, that valuation. So here you have to check depreciation. Depreciation is done correctly. Then you have to check capital expenditure is correctly capitalized. So you have to see all the expenditure is correctly capitalized. You have to check cost of acquisition. Okay, you have to check cost of acquisition. You have to see fair market value, especially in terms of inventory. So all these points you need to check. Is everyone clear? You also need to check contingent liabilities. So these are general points. These you will check in anywhere, right? Even if you go to a small basic sole proprietorship audit also, you will check all this. So this is nothing special. This is what you check in everywhere. In any audit, you will check these things. These are basic assertions. You know what's an assertion? These are all basic assertions that you'll check anywhere. So there is nothing special. Okay. All right. Next point. Next, what is a special area of audit? Next special area of audit is adherence to cooperative principles. What does it mean by adherence to cooperative principles? Now, this is a very important point. As an auditor, I cannot just go and do the vouching and come back. Like in an NGO, we need to see whether the donation money is correctly spent, whether the NGO's objectives are correctly followed, wrong work is not being done in the name of an NGO. Same way, when I am going for a cooperative society's audit, I need to see whether cooperative principles, the objects are being achieved. The objective of that cooperative society is being achieved, whether you are extending benefits to members. Okay? Are you doing proper accounting? Are you making proper budgets? Okay? All of these things, whether goals are being achieved, then whether there is any wastage of funds, whether there are any middleman commissions. Do you think if I go to audit a cooperative society and they have paid a lot of middleman commission, is there any use of being a cooperative society? If a lot of middleman commission expenses are being shown, is there any use of being a cooperative society? No. So of course, you have to keep this in mind. Okay. So you have to see whether the way in which cooperative society is working, whether it should be working in that way and whether it is achieving the purpose for which it was created. Okay. Next is also quite simple, quite straightforward. compliance of provisions of Act and rules. So the next important thing is you have to check compliance. This is very basic. You have to see whether cooperative act is being followed. You have to check whether bylaws are being followed. You have to check rules and regulations are being followed. That's it. So you have to see as per state act, provisions are followed. All these points you have to see. That's it. This is just general point. Next, come to seventh point. This is very interesting. Members register. And passbooks. Okay. Now again, infringement means violation. Infringement means violation. Okay. So members register. Again, come back to this. Our little drawing of cooperative society. Come back here. So suppose this store has been created and there is one member here. Okay. Let's imagine they're all farmers. Not farmers, sorry. Let's see, they're villagers. So many of the villagers have also become part of this cooperative society. Now, the rule of the cooperative society is this store of organic products that you don't have to pay each time you take something. You have to pay over a period of time. So suppose you can buy regularly, but you have to clear your dues once in a week or once in a month. Now, this villager, there will be two ways in which this thing will be maintained. First, the society, suppose his name is Z. So, society will maintain members register. So, society will maintain that Z has an overdue of 1,000 rupees. Then Z will have something called as passbook. And this passbook will also should also mention that he has 1,000 rupees pending. So auditor needs to tally that member register that is maintained by the cooperative society and the passbook that the villager or the members have should match with each other. What do you think is the logic behind this? What do you think is the logic behind this? Passbook you all know, na? You also have bank passbooks. What do you think is the logic behind this? It is to ensure that if there are illiterate members, suppose you are running a farmer credit society wherein you give small 10,000, 20,000 loans to poor farmers who are taking money from you to, buy some seeds, buy some fertilizers. You are not taking advantage of their lack of knowledge or illiteracy and adding things to their cooperative register, showing that no, you have to pay us 3,000, but that poor farmer is saying, no, but I have to pay you only 1,500. So the members register and passbook should match. So that becomes one of the important things that we have to do. So in this passbook, we have to mention that what are the loans given, when were the repayments done, okay? Then confirm the loan balance, confirm the balance outstanding. This is to ensure that there is books of accounts are free from any manipulation. Books of accounts are free from any kind of manipulation. This especially is very important in rural and agriculture society. So that is why you can only do sample basis. You can't check each and every, but auditor has to apply his own judgment that how much he needs to check. But this is one of the important audit areas. Everyone clear? Next point. Next point is very, very, very important. One of the most commonly asked questions. When do we give a special report to registrar? This is quite important. This is important because you have to maintain the language. Okay. You cannot write fully on your own. So when do we give a special report to registrar? Please focus on the language also that I am using. In following situations, we give a report to registrar. Cases of personal profiteering. So if there are any cases of personal profiteering, which is detrimental to interest of society. So if there are some people for their personal gains, they are running the society in such a way that it is causing harm. Detrimental means it's causing harm, hanikarak. Detrimental means hanikarak, harm. So if it is causing harm to the interest of the society, wherein suppose a new store was supposed to be set up, but instead of finding a right location for it, you found and put the store on land just because your brother will get rent. That is called as case of personal profiteering. So auditor has to see if there is personal profiteering by whom? Members of managing committee. So if there is any kind of personal profiteering by the members of managing committee that is detrimental to the interest of society, that needs to be taken into account and reported to registrar. Next, detection of fraud. If you find any fraud, see, personal profiteering may not mean fraud, may mean that, okay, I found something and I made it, let it happen instead of stopping it. But detection of fraud means you're actively involved in manipulation. So if you have found any fraud which is related to expenses, purchases, property, stores. So, with respect to any expenses, purchases, property buying, stores opening, or the inventory, if you're finding any kind of fraud, you have to report it to the registrar, obviously. Then, cases of mismanagement. How is it different? Cases of mismanagement means, suppose there is a bylaw that you should give at least 30 days of notice before calling a meeting. But every time the management is doing meeting with just 1 day notice. It is not a fraud. It is not profiteering. So where will it come? It is called as mismanagement. So they are not doing any fraud. Maybe there is some other fraud, but when meeting is not called properly, notice is not given, quorum is not maintained, those are called as cases of mismanagement. So cases of mismanagement, which means decisions that are against cooperative principles, that also needs to be reported to the registrar. Very, very important. And last, if you are auditing an urban cooperative bank, and this bank is just like that, proportionate, okay. Giving loans, advances, disproportionate means you are giving me security of 10 lakh rupees. I am giving you loan of 20 lakh rupees. Your business has turnover of 20 lakh rupees. I am giving you loan of 60 lakh rupees. That's called as disproportionate. So disproportionate advances are being given to vested interest groups, means groups with some personal agenda. You are giving loans and advances to groups with some vested interest. So who can be these? Examples can be relatives of management. Relatives of management committee, you are giving loans. So these can cause reckless advancing. What is reckless advancing? You know what is careless? Even worse than careless is called as reckless. Suppose you're driving and someone is driving the bike very fast. So they are endangering you also, themselves also. So you can say, kya reckless driving hai? Okay, so reckless is even worse than careless. Without following procedure, without proper security. Very good. Without worrying what will happen to the bank, without having any understanding that how much harm it can cause to the members, without understanding anything into consideration when you give money to people and just give loans. That is why it's called reckless advancing. Okay. That is why many cooperative banks faced problems in the past 15 years. Okay. Because of all this only, because of disproportionate advances and reckless advancing. So when is advancing? Without taking adequate security or proper safeguards for creditworthiness. What does it mean by creditworthiness of party? What does it mean by creditworthiness? No, not surety. Creditworthiness means suppose I have monthly income of 20,000 rupees. Will you give me a loan of 2 crore rupees if I have monthly income of 20,000 rupees? Can I pay EMI of 2 crore for 2 crores? No. So whenever you give any money to someone, you have to see what worth of credit they can get. How much worth of credit they can get. Is that clear? So as an auditor, there are 4 situations in which you will report to the registrar. First is per cases of personal profiteering, which is personal profiteering by the members of managing committee that is detrimental to the interest of society. Second is detection of fraud, which means expenses, purchases, properties, and stores. Cases of mismanagement, which are decisions against the cooperative principles. And in case of urban cooperative society, when disproportionate advances are given to vested interest groups or relatives of management committee, or when reckless advancing is done without taking adequate security and proper safeguard for creditworthiness. Completed? Special report to registrar. Very, very important. We are done. Okay. Next. Remember, पर्सनल प्रॉफिटियरिंग, पर्सनल प्रॉफिट ज्यादा किया तो क्या हो गया? फ्रॉड हो गया. क्यों हुआ फ्रॉड? क्योंकि सब लोगों ने मिसमैनेजमेंट किया और रेकलेस एडवांसिंग दी. I'll tell in English again. Why? Just remember the flow. You had personal profiteering. How did you do personal profiteering? Because you did fraud. And because of fraud, what happened? Mismanagement happened and you did reckless advancing. Everyone clear? So you can remember it. We'll go to the next point. Ninth, audit classification. This is very unique point to cooperative society. Okay. Audit classification of society. So each state registrar has created some parameters. After doing the audit, according to those parameters, you have to award a class to society as per parameters by registrar. So you have to be very careful when you give a classification to society because it affects their rating, it affects their ability to get loans, it affects their goodwill, it affects everything. So you have to be very careful when you give this. So now, suppose I have given you a class and you are not happy with it. So if management unhappy, you can appeal to registrar. So if management is unhappy with the class that you have awarded to the society, they can complain it to the registrar. Everyone clear? That's it. And last, this is also very interesting. You cannot finalize the audit report of the cooperative society without first compulsorily discussing the draft report with the managing committee. Okay? Audit report cannot be finalized without discussing draft report with managing committee. Everyone clear? That's it. So we are done with all the important audit points. Usually those parameters can change, Anil. Usually it is like how much benefits were extended, how many members did you enroll in a year, how many meetings were conducted, how were the elections conducted, how many days of notice was given, how were the complaints resolved. So there are many parameters. So that depends on the type of society. Is that clear? Special report, there is no such requirement, Kuldeep. Special report, there is no such requirement. Okay. But I will tell you reality, we will never, ever just see and complain to registrar without first discussing, because sometimes what we have found might have an explanation or a proof. So in real life, no audit report is finalized without first discussing with the company or proprietor or partner or managing committee. Is that clear? Especially if you're making a very, very complaining kind of report, which can affect, you have to give a chance, opportunity of being heard. Yeah. But it is not mentioned specifically. Okay. It is mentioned only here for audit report, but reality is, and that opportunity is always given. Okay. For every entity, it happens, but it is not written in Companies Act that you have to. Is that clear? But if you will study many of our standards of auditing, I taught you in last chapter that whenever you want to give qualified opinion or emphasis of matter paragraph or other matter paragraph or key audit matter paragraph, did I not teach you that first discuss the wording of the paragraph with the management? That is in the spirit. Okay, that is in the spirit of that we are not CIDs. Okay, we are not here for investigation. We are here to sort of improve and make things clear. Okay, we are not here to find fraud. We are here to check. Checking के दौरान कुछ मिल जाए, while checking you find something, then we report. But our purpose, my aim to check something is not to find fraud. That is not my aim. Okay. So that's it. Yes, audit is very interesting subject. I find it very interesting. I have always loved auditing since I was a student. So I find the subject, and I always feel that subject will treat you the way you treat the subject. So if you think that by just reading 50, 60 pages of notes, I should get good marks in auditing, no, it won't happen. The subject will treat you the same way you treat subject. आप खुशी से पढ़ोगे, आप इंटरेस्ट लेकर पढ़ोगे, आप अच्छे से पढ़ोगे, तो सब्जेक्ट वैसे ही रिवॉर्ड करेगा. If you think of subject like a headache, if you think of subject like an obstacle or a problem, then it will become that. So if you want subject to treat you well, you have to treat the subject well. Okay. You have to spend time with the subject for it to reward you. So that time spending is important. That's it. Done. So here we are done with the whole cooperative society. See, here also it ended with coincidence only. Okay. So here also it ended exactly on the line. So we have finished the whole part. Nothing I have left. I have completed each and everything. Is that clear? So we are finished with special points of an auditor. Can I move on to the next topic? Next topic we are going to do directly from the book. Next topic we are doing directly from the book. So here we will focus on some specific things that we need to memorize. So before we go into deep, let me explain to you. Here it's a next topic called as multi-state cooperative societies. Now let's say that I started in one state. Let's say I started my cooperative society in Maharashtra, and Maharashtra has its own act. But now I want to open my organic stores in different states of the country. Okay, I want to open in different states of the country. Okay, so a society that operates in more than one state cannot follow the state act. Yes or no? If I want to do operations in Maharashtra also, and I want to do operations in Orissa also, and in West Bengal also, in Tamil Nadu also, now what will I do? Each cannot have its own act. That is why there was created Multi-State Cooperative Society Act 2002. Simple. So Multi-State Cooperative Society Act came into force in August 2002. Just remember for MCQ. When the objects are not confined to one state. Central Act is not for multi-state. Central Act is a guiding base. It means even if you are operating under Central Act, you can have a state act applicable on you, right or not? So if I am running a cooperative society in Maharashtra, so Maharashtra's Cooperative Society Act is also applicable on me, and Indian Normal Cooperative Society Act becomes my base. But when I am operating in more than one state, then there should be a act like Companies Act. So I'll tell you small story that this Cooperative Society Act was created same as Companies Act 1956. So before Companies Act 2013 came, this act used to exist. So when I studied my CA, that time it was Companies Act 1956. So this Multi-State Cooperative Society Act that we used to study was copy paste, literally copy paste of Companies Act 1956. Now Companies Act 1956 went away. We have Companies Act 2013, but this act is still similar to mirror image of Companies Act 1956. So this act was created with the intention like how companies work under a central act with single rule system. Same way, if a society start to operate in more than one state, it should be brought under Multi-State Cooperative Society Act so that there is single rule to be followed. Everyone clear? Just underline this. Funds of a multi-state cooperative society cannot be utilized for political purpose. Just remember for MCQ. Okay. Next. See, everything is same. Now, what I have written here, that's why I'm not writing, because many things you'll find same with Companies Act or with what we have studied previously. So any books of accounts will be all money received, all money spent for receipt and expenditure, sales and purchase, assets and liabilities. And if you are a multi-state cooperative society which is engaged in production, processing and manufacturing, then you need to have details of materials, labor, other items. Basically means you need to maintain some cost records. Okay. So if you are involved in any production, processing or manufacturing work, you need to maintain details of the materials, labor, everything else you need to maintain. Now audit. Now who can be an auditor in Companies Act? Quickly tell me who can be an auditor in Companies Act? CA only? This diploma holder and all cannot be, right? So same way in Multi-State Cooperative Society Act. So you don't have to worry that how will I remember, ma'am. Multi-state, remember, it's like Companies Act. So qualification is a person who is a chartered accountant as per CA Act can only be appointed as auditor. So in multi-state cooperative society, only a chartered accountant can be appointed. Internal auditors never have compulsion to be a CA. if I am a CA, if not, I am a CA. My father is running a business, Navneet. Okay, suppose my father is running a machinery business, machinery building business. Can I be internal auditor of his company? Can I be internal auditor? Yes, there are no such disqualifications. Of course, we can apply independence principles, but legally, can I be an auditor, internal auditor? Yes. So, whenever I say the word auditor, whenever we study about rules and regulations, I mean always external auditor unless I specifically mention internal auditor. Because internal audit is completely different to external audit. Is that clear? So whenever we talk default, the default is always external auditor. So here we are talking about which auditor? Always, whenever there is nothing else mentioned, it means external auditor. Then who are not eligible to be an auditor? A body corporate. Ma'am, but you cannot be partner of your dad's business. Yeah, I cannot be. Okay. I cannot be a partner. Okay. So, yes, where was I? Who cannot be an auditor? So, a body corporate cannot be an auditor. Officer or employee of multi-state cooperative society cannot be an auditor. A person who is member of that society cannot be an auditor. A person who is in employment of an officer or employee cannot be an auditor. Okay. And lastly, a person who is indebted to the cooperative society or has given any guarantee or provided any security with respect to indebtedness of a third person for more than 1,000 rupees. For more than 1,000 rupees. So this is what actually used to be in 1956. Have you studied company law? Auditors part? Section 139, section 143. So now you have limit of 1 lakh and 5 lakh, right? 1 lakh and 5 lakh. But when I was studying, we had Companies Act 1956. That time the limit was 1,000 rupees. So this is the same thing. This is that old way of doing things. So if you are indebted or if you have given guarantee for someone else for more than 1,000 rupees, you cannot be an auditor. Okay. So even after your appointment, if you become disqualified, you have to vacate your office. Okay. So even after appointment, you become disqualified, you have to vacate the office. Now come to appointment of auditors. Here I'll just quickly tell you, if you are a first auditor, you are appointed by board of directors within 1 month of incorporation. So you are appointed within 1 month of incorporation if you are a first auditor. And if you are a subsequent auditor, you are appointed by members of the society at next AGM. Okay, each AGM, the member will be appointed. Everyone clear? So this is it. What is it? So first auditor or auditors will be appointed by board within 1 month of the date of registration of society, and they will continue to hold till the conclusion of the first AGM. If board fails to exercise its power, then general meeting may appoint the first auditor. Subsequent auditor will be appointed at each annual general meeting, and they will continue to hold the office till the conclusion of the next annual general meeting. Very, very straightforward and simple. Okay. So this is clear. Next, powers and duties. This again, you don't have to go too much. I told you na energy here. So energy needs to be very less in this. So powers and duties are very similar. You can check all. You can check all at all times books and accounts and vouchers. You can ask. You can require the officers and employee to give you any information and explanation that is necessary. What inquiries you can make? Auditor can do the following inquiries. If loans and advances have been given, whether they are properly secured and terms are not prejudicial to the interest. If the transactions are merely represented by book entries, they are not prejudicial. Personal expenses are not charged to revenue account. If shares have been allotted for cash, whether cash has actually been received. Do you remember where we studied this exact answer? Do you remember where we studied this exact answer? Audit report. Yes, we studied section 143, subsection 1, duty to inquire. Everyone clear? Okay. So it is same, copy paste. Content, you can just read on your own. It is very similar. I don't want you to put too much energy in this. Okay. Come directly to power. Here you mark as important. Here you can do read only. Why is that? Because the audit report that we studied in previous one was very important. So I don't want you to get confused when you study this because that is more important. This is not very important. So you can just go through this, but here is where you have to pay attention. Here, I'm finally telling you what is important. Till now, I have not marked anything important in multi-state cooperative society. Okay. So come here directly. After this answer, we are taking a break. Okay. Power of central government. Power of central government to direct special audit. Power of central government to direct special audit. So under 77, here you'll remember the section number. Section 77 special. Section 77 special. Okay. So special audit, who has the power? We are not, I did not say the word registrar. Central government has the power to require some special audit to be done. When? So when it can be done, when affairs of the multi-state cooperative society are not being managed in accordance with self-help principles, mutual deed, cooperative principles, prudent commercial practices, sound business principles. This language you need to maintain. That is why I marked this important. So when can a central government interfere and ask for special audit? First, the way you are doing your business, that means affairs. The way you are doing business, it's not as per self-help, mutual or cooperative principle. So you are working in personal capacity instead of mutual or mutual benefit. And prudent means with common sense you are not doing, with wisdom you are not doing any work, and your way of doing work is not sound. So the rate at which you are selling to your members is not sound. So that and all combined, that is when the central government can interfere. Then multi-state is being managed in a way that can cause serious injury or damage to the interest of trade industry. Now, what does this mean? Suppose I am running a milk cooperative society and I am offering everyone, hey, my milk is available for 2 rupees per liter, 2 rupees per liter. And what is happening? Everyone is going to them and it is causing problem to the whole dairy industry. That is called as injury to the whole trade industry or to the business. Everyone clear? So the way you are doing business is not causing only problem to you. It is injuring the whole industry to which you belong. And now, lastly, central government can interfere when the financial position can endanger its solvency. When the financial position, which means you are a sick society, okay? Your society is such that financial position is now such that even your solvency is doubtful. You're going towards insolvency. So in these situations, central government can order for special audit. Remember this point. So affairs not being managed according to prudent commercial practices, injury to the interest of trade or industry, and financial position is endangering its solvency. When can be done? It can be ordered at any time. Okay. At any time for any period. The central government can say for 5 years, I want special audit. For 3 years, I want special audit. So it depends on them. Auditor can either be chartered accountant or the multi-state auditor himself. So the central government can appoint a new auditor, or they can ask the multi-state cooperative existing auditor to do the special audit. It is their wish. But this can only be done if special audit can only be done if central government or state government itself or both hold 51% or more of paid up share capital. So basically it means that special audit can be done in what? If central government or state government or both are holding more than 51% of paid up share capital. Everyone clear? Then only this special audit can be done. Now, special powers are same normal powers that you have as an auditor, but instead of making the report to the members, you will make the report to central government. This part you remember. So special auditor does not make the report for the members, they make the report for the central government. Now come to this part, action. The central government can take any action that it considers necessary, but it has 4 months to take the action. Okay. How much time does the central government has from the receipt of the audit report? They have 4 months to take any action. Okay. But if they don't take any action, what will happen? If they don't take any action, then the government will just send the report and they will ask it to circulate the report to the members. That's it. First, I'll repeat. Special audit is done. Report is sent by auditor to the central government. Central government has 4 months time to take some action. Central government did not take any action for 4 months. Then central government will send the report or any part of it to the cooperative society and will tell cooperative society, circulate it to all your members or read it out loud in the next general meeting. That's it. Who will pay the expenses for special audit? The special audit fees will be decided by central government, but will be paid by multi-state cooperative society. Okay. The fees will be decided by central government, but will be paid by multi-state cooperative society. Everyone clear? Okay. Here we'll take a 5-minute break, not 10 minutes. I want all of you back in 5 minutes. Okay. See you all in 5 minutes. Very small, quick 5-minute break. Okay. Okay. All right. Nothing heavy topic today, right? Not a very heavy topic today. No standards, no audit procedures. Okay. Now, see, what did we study here? We studied special audit by central government. Now, we are left with just two topics in cooperative. Inquiry by central registrar, not central government. Inquiry by central registrar and inspection by central registrar. Okay. Inspection is also by central registrar. Inquiry is also by central registrar. Now, if central registrar receives a complaint from federal cooperative to which the society is affiliated, what does this mean? Suppose, same, I'll take the milk example. I am personally running a milk cooperative, right? So, for example, Sumul, Nandini, Amul, I'm running a milk cooperative society and I'm affiliated to Dairy Market Association of India, let's say. Okay. So, that Dairy Market Association of India is making a complaint against me as a cooperative society. Understood? So if you are affiliated to a federal society, which is like the main mother institute of your business to which you belong, then if they complain about you, registrar can take action. So federal cooperative to which society is affiliated or a creditor, underline this. So if I'm a creditor of even 10 rupees, can I complain to registrar? Even if I'm a creditor of 100 rupees, 10 rupees, can I send a complaint to registrar? Why no? Why no? Is this mentioning any limit? Is this mentioning any limit that you have to be a creditor of more than 5 lakh rupees? So any creditor. Or if you are total of 1/3 members of the board. If you are 1/3 members of the board, it means if total number of members of the board are 9, then if at least 3 people are complaining against the cooperative society, the registrar can order an inquiry. Okay. Or not less than 1/5 of the total number of members. So what did it say? When can you have inquiry? You can have inquiry if your federal cooperative complains, a creditor complains, 1/3 of board complaints, or 1/5 of total member complaints. Done? So if any of them complain, or send a request for inquiry, the registrar can order an inquiry. Everyone clear? Remember this for theory and MCQ. Okay, registrar will appoint the person who will do the inquiry. It is not necessary it will be by an auditor. It is not necessary it will be by a CA. Okay. So registrar can choose any person. It can even be a government department person. Okay. So how? You can hold an inquiry directly or some other person authorized. Okay. That's it. Any person authorized can inquire into constitution, working, financial condition. Any of these matters you can inquire. Before holding, you have to give 15 days of notice. Remember this point for MCQ. How many days of notice you have to give before you cannot just send a person. Oh, I have sent a person for inquiry. No, you have to give that we have received this request. We have to hold an inquiry and you have 15 days of time to prepare. So 15 days notice must be given. Okay. 15 days notice. What are the powers? At all reasonable times, you will have access to books, accounts, documents, and securities, cash, any properties. You can also summon any person who is in possession or responsible of the custody of such properties, and you have to produce the same at any place specified by him. Again, I'm repeating. First power. I have the power to access at all reasonable times all the books, accounts, documents, or I have the power to summon people who hold those books of accounts and to ask them to produce at any place that I want it to be produced. So if I want it to be produced at my registrar office, it can be produced even at registrar office. Then you also have the right to call a general meeting by giving notice of not less than 7 days at such time and place at headquarters of the society. And if officers refuse to call the meeting, they can have the power to call it themselves. Okay. So the second is about meeting, general meeting. So second power is I can ask any officer of the cooperative society, hey, call a meeting. I want to meet all the members. So with 7 days notice, he can do that. But if the officer is not cooperating with me, not sending the notice, then I myself, the person sent by the registrar, can call the meeting. Next, he can summon any person, not necessarily an employee. Just remember, okay? Not necessary employee or member. Okay? Any person who I feel are having any knowledge of the society, and I can examine such person on an oath. So any person, which means employees, members, and anyone else who I believe knows something, what's going on in the society. There's some problem. I think you know it. So you come, talk to me, and I can examine such person on an oath. Okay. Then central registrar has time of 3 months. Here it is 3 months. Special audit, it was 4 months. Registrar inquiry, it is 3 months you have time to communicate the report of inquiry and to also the people to which society is affiliated or at whose instance inquiry is needed. So within receiving of report, within 3 months, you have to give the report of inquiry to the society and to anyone who complained or sent the request. So within 3 months, they have to finish the work. Now let's come to inspection. Same points. Can you see? Federal cooperative, not less than 1/3 of the members of the board, not less than 1/5 of the total members of the board, or accredited. Same, exact same. Same as inquiry. Okay. Then you can authorize any person. Same thing, constitution, working and financial condition. How many days of notice? Not less than 15 days notice. Everything same. Now, where is the difference? He shall at all times. Can you tell me the difference between go and read what was in the inquiry and now read an inspection? Where did the difference come? Go and check the inquiry and now see the inspection. What was the difference in the first point? Quickly write. Incorrect, Kuldeep. Everyone, it's not that hard. I will not ask you if I feel you don't have capability to answer. Okay, I don't see any replies. Yes, Tanu. Correct. Tanu is correct. So in inquiry, you can only meet them, ask them for things at reasonable time, which usually means business hours. But inspection is more serious process, more strict process. Here, At any time, even if at 1 a.m. in the night, registrar wants access, you have to provide access. Is that clear? So it's just a more strict process. Process is similar. It's just a more strict process. So at all times have access to all books, accounts, papers, vouchers. And if any serious irregularities discovered during an inspection, you can take them into your own custody. There it was that you can have access. Here you can take them into your own custody. You can verify their cash balance. You can call a meeting if it is necessary. Then every officer or member of multi-state cooperative shall furnish any information as the central registrar may require. So you can ask for any information. Yes, Kuldeep, it's done. Reasonable versus all time. Yes. So in inspection, you have power to access at all times. You can even take them into your custody if you find something. You can call a meeting and you can ask every officer or member to furnish such information as may be needed. And same thing again, you have to furnish the report within a period of 3 months from the date of completion of such inspection. Everything is same, only that one point was different. Everyone clear? No, it will be the decision of the registrar whether they are going for inquiry or inspection. And it also depends on the request that they have received from creditor or members of the board. It depends on that also. Okay. All right. Now we are just left with some small topics here and there that I'll finish for you, and then we are done with the chapter. All right. So every one of you, have you studied AS 19? Have you studied AS 19? Everyone quickly tell me. So every one of you know what does it mean by a lease and what does it mean by a hire purchase? Lease you have no, and hire purchase you have studied in general, right? Okay. Now let's suppose you are auditor of a leasing company. Okay. Suppose you are auditor of a leasing company. So you are someone who gives on lease. Let's do the leasing company. Okay. Yes, lease can be financial lease or operating lease. Okay. So suppose you are auditor of a leasing company. What all are we going to check? So what are my audit procedures? First thing I need to check audit procedures. First I need to check is constitution. Remember SIP real. Do you remember SIP real? Do you remember SIP real? But of course, we are not going into that much detail, just basic points. So you are starting audit of a leasing company. First check the object clause. Object clause means you need to check that what kind of activities it can undertake. What kind of activities this leasing company can undertake, what kind of lease it can give, and you are financing activities are even allowed by the company or not. So first you check the object clause. Second, you check how are they analyzing the credit analysis of the lessee. How are they analyzing whether he can repay me the money, whether we can give him such facility or not? How are we doing the credit analysis to ensure that he will be committed to paying us the money back? Then the third important thing you will check is lease agreements. So what will you check in lease agreements? Think about what all points we'll check in lease agreements. First, there should be good description of lessee, what you have given for lease, where is it located. All these things you need to see that lease agreements has all these details. Then it should have amount of lease, tenure of lease, schedule of payment. It should have schedule of payment, whether any late charges, whether any penalty needs to be taken, whether any deposits have been taken, etc. should be seen. Okay. Then whether how will equipment be returned to lessor? How will termination of agreement happen? How will termination of agreement happen? All these details should be mentioned. What type of lease it is, correct? What type of lease it is. Then any prohibition on subletting the equipment. There should be clear that if A has given to B, then whether B can give it to C or not. So that should be properly mentioned. Okay. Then lease agreement you have studied. Then you will see lease proposal. Lease proposal is properly received from the lessee or not. Then there should be a proper acceptance letter that they have accepted all the terms and conditions of the lease and they have received the equipment. They have received the equipment or not. Then original invoice should be kept properly. Original invoice should be kept properly. Then insurance should be kept properly. Insurance policy has been there or not. Then whether any board resolution was passed by the company, by the lessor before they took our machinery, so that we know that it is done with the permission of all the board. So for a leasing company, the major thing becomes first you need to see whether they are even allowed to lease. Okay. How are they giving lease to people? Are they doing credit analysis? Okay, I've decided I'll give money. But how do you do the agreements? In agreements, there should be proper details of description. This description that you're saying, the manner of use, what rate, all this is included in description. Okay. So description of lessor, lessee, equipment, location, everything should be done in detail. Amount and tenure, schedule of payment, late charges, penalties, deposits, everything should be mentioned in the agreement. How will it be returned? How will the agreement be terminated? Everything should be mentioned. And whether there is any prohibition on subletting the equipment should be clear. After this is done, auditor should check, okay, so the basic is established. I can give, which means constitution allows me. Credit analysis process is clear. Lease agreements formats are very clear. After this, I should check whether lessee has sent a proposal. Just like when you go to a bank, you give application for loan. Same way, when someone wants to take any equipment on lease, they have to give lease proposal. Then you have to see whether acceptance letter by the lessee is available or not, that they have received the equipment, they agree with the condition of the equipment, and they accept the lease to start. Then original invoice should be properly kept. Insurance policy should be properly kept. And board resolution, which means if you have given machinery to a company, there should be a proper board resolution that we are agreeing to do the lease. So like this, all these points you need to check when you're doing the audit. Everyone is clear? Any doubt in this? Clear? All right. Clear, ma'am. All right. Anyone else? Can I move to the next? Now I'll tell you basics on hire purchase. Okay. What will we check in a hire purchase? What will we audit? Here also we are doing basics. Okay. Don't think in very, very depth. So if hire purchase transaction has happened, what can auditor check? First, you will check whether agreement is properly in writing, it's properly signed or not. Okay. Then you have to read the agreement. You have to mention price of goods should be there. Price of goods should be there. Then purchase price. That option is given in hire purchase to purchase. Then date of commencement. Date of commencement should be clear. Number of installments and amount. It should be clear. Number of installments and amount plus date of installment should be very clear. How it is payable, how you have to pay, place, everything should be clear. Description of goods which you're giving for hire purchase, that should be clear. And whether installment is being received regularly. Whether installment is being received regularly. So in a hire purchase, mainly we verify, because it is not necessary that it's done through a company. It can be between two people. So if there is any hire purchase done, see if the agreement is properly in writing, it is properly signed. Price of the goods is properly mentioned. Purchase price is clear. Date of the commencement is clear. The number of installments, amount, date, place, mode in which the payment will be paid and received is clear. Description of the goods is properly given so that they are identifiable. Okay. They are clearly identifiable. And installment is paid regularly or not. That's it. These are the audit points for hire purchase. Everyone clear? EMI I have written here, number of installments, amount. Okay. Archana? Very simple. Hire purchase. Okay. Now I'll just go to the theory ones so that I can just show you how to study. See, this hire purchase and lease, na? It first has a basic description of what does it mean. Okay. So what is the meaning? This is all meaning of hire purchase. So this is for understanding. This is for understanding, which you already have because you know what is a hire purchase. Now, what is a hirer? Hirer means a person who obtains possession. Owner means person who has delivered the possession of the goods to the hire purchaser. All these are generic points. See at these points. Here you mark it as important. Audit procedures. It can also write audit checklist. Okay. What are the main things to verify? Audit checklist, I've already made that small flow chart for you. Hire purchase is in writing. It's signed. Hire purchase agreement should clearly have hire purchase price. It should have cash price of the goods, which means it may be purchased by hirer for cash. Date on which agreement is commenced. Number of installments, amount of each installments, date, mode, place where it is payable, goods to which it relates to identify them, and installments are received regularly. Did I miss any point? Did I miss any point in that flow chart? All points are done. Okay, very simple. Now let's come to leases. In lease agreement, again, this initial part is for your understanding. They are telling you what lease is. So lease agreement has lessee. It has a lessor. Lessee means someone who has a right to use an asset for some period of time. In certain lease agreements, legal ownership of the asset remains with the lessor, but in substance, all risk and rewards of ownership are transferred to the lessee. In such effect, it is a financial agreement. That is why this is called as financial lease, where all the risks are also transferred. An operating lease is simple arrangement where in return of rent, you allow someone to use it. Simple. So this is all generic. Here, mark this as important. Audit procedures. Audit procedures for leasing company. Here, this is generic means how does a finance lease work? Lessee will select the equipment, see if it is satisfied about it. Then if you choose the equipment, you approach the lessor. A lease agreement is then made. Rates are finalized. Lessor places an order. Manufacturer delivers the equipment and you give the notice of acceptance to lessor. Lease agreement is properly signed. During the lease, you have to pay regularly, keep the equipment in good working condition, and you are entitled to all warranties. After the end of lease period, equipment will go back to the lessor. You can get a renewal right or maybe allowed to participate in purchase, but this option is not given in the lease agreement. So here there is nothing about audit. Here they're just giving you what does a lease mean. So this you already cover in AS 19. The main question that can be asked in audit paper is audit procedures. This I already did for you. Check the object clause. Check the procedure for credit analysis. Lease agreement should have description of lessor, lessee, equipment, location. It should have tenure of lease, date of payment, late charges, deposits, advances. Equipment should be returned on termination and cost will be borne by the lessee. Agreement prohibits lessee from assigning or subletting. Lease proposal should be submitted by the lessee. Invoice should be retained safely. Acceptance letter should be obtained. Board resolution authorizing a partner to execute the lease should be there. Copies of insurance policies is observed. See, basically all this you need to see in AS 90. So here, did we miss any point? This audit procedure I already covered in that small flowchart. Everyone clear? These are just residual points left now. Okay. Now, finance lease and operating lease is same as AS 90. You can just read it. Read only as per AS 19. So this you can just read. This is difference between operating lease and finance lease. It's already done in AS 19. Everyone clear? Which answer you have to focus on for audit purposes? Which answer you have to focus on? The audit procedures. Okay. Audit procedures for an auditor to check leasing company, audit procedures to check a hire purchase. That's it. So this is finished. Now we'll go to the next. Audit of trust and society. Now, again, this you will feel a little bit that you know already because we studied audit of NGO. Do you remember we studied audit of NGO? Do you remember we studied audit of NGO? Okay. Now let's see this. That's why I'm calling all this as residuary topics. Our main topics are finished. Now we are just left with small topics here and there that we are finishing. Okay. Audit of trust and society. So now you know if it is a trust, if it's a charitable institution, you have to register public trust into as per the relevant state. But if there is no state act, you have to follow Indian Trust Act. If you're a society, you have to register as per Societies Registration Act. If you're a Section 8 company, you have to register under Companies Act. In general, everyone has to register under Income Tax Act. And if you are receiving foreign contributions, you have to register under FCRA. Anything new? Did you study anything new? Okay. Nothing new. Everything already finished. Nothing. Books of accounts. Any charitable or religious institute should maintain regular books of accounts. So what does a trust needs to maintain? They need to maintain cash book, general. They have to maintain ledgers, yes. They have to maintain journals, yes. They have to maintain vouchers. Vouchers means copies of bill, numbered, serially numbered copies, counterfoils. They have to maintain original bills if someone has given it to them. So this they have issued, and this they have issued to another person. Okay. On receipts in respect of payments made by the other person, and any other book that may be required. So very difficult answer we are doing. What books of accounts a trust has to maintain? Cash book, ledger, journal, all the copies of bills received, all the bills issued. Simple. All the counterfoils, all the receipts you have to maintain. Now, financial transactions and all this point you can read only. I'll tell you in case you are worried that ma'am is saying read only. Financial statements, trust has to prepare financial statements. They have to prepare balance sheet, income and expenditure account. How to prepare it is as per the state law. Charitable organizations are governed by different laws, so they can have different accounting aspects. Yes, we know, ma'am. Auditor's responsibility. Auditor, come directly here. Okay, just basic points, whatever I'm telling you, remember that. Auditor has to obtain list of books of accounts. Okay, then he should verify the records, and then he should comply with accounting standards, standards of auditing. Okay, you have to conduct audit by applying generally accepted auditing procedures. You have to do test checks. You have to evaluate internal control. You have to see concept of materiality. You have to maintain detailed notes about evidence and maintain all the working papers. Anything new did you study? Did you study anything special here? Obtain books of accounts, verify them, follow all the accounting standards, follow all the essays, follow all the generally accepted audit procedures, do test checks, check internal control, check materiality, maintain notes, maintain all the working papers. That's your whole essay. Okay. If you're maintaining working papers, what should be there in your working papers? What work did you do? Who did it? What work you do? Who did it? Whether you got all the information and explanation? What decisions you took? Any judicial pronouncements, means any case studies that you referred, any certificates that were issued, everything is part of working file. You studied all this in essay 230 already. Okay. So anything I did is working paper. Anything I received is working paper. Any judgment I took is a working paper. Any cases I referred is working paper. Any certificates I received is working paper. Is everyone clear? Any work I did is working paper. Any information I received is working paper. Any certificate I received is working paper. Any judgment I took, decision I took is working paper. Any case studies I referred to is working paper. Done. Now directly come to this part and mark this as important. Audit of trusts. Mark this as important because it is new. It has been recently added. So I don't want you to take this point lightly. We will aim, see, it has a lot of points. So it's not possible to memorize everything, but we will ensure that you memorize at least 8 to 10 points. Okay. We'll make sure that you memorize at least 8 to 10 points. So how I divide it, pay attention here. Audit of trust, I divide into 3 parts. The first is books. Second is money. Third is trustee. And rest is others. So the first thing we will do is divide this whole answer into 4 main points. Okay. Books, money, trustee, and others. Okay. First, let's do the trustee part. First, let's do the easy part. So as an auditor, I have to focus on 4 areas: books, money, trustee, and others. Let's see that what I have to check for trustees. First, I have to check is maximum and minimum trustee is properly maintained. First, I have to check is minimum and maximum trustees properly maintained. Now, properly maintained, but are they meeting? Are they meeting regularly? Are they meeting regularly? Okay, they are meeting, but is minutes book maintained of the meeting? They're meeting, but is minutes book maintained? Do these trustees have any interest in investments of the trust? Do they have any personal interest? Are these trustees debtor or creditor in the trust? That also I need to know. Is that clear? Trustees point clear? What all will we check in a trustees? Whether maximum and minimum trustees are maintained. Are they meeting regularly? If they're meeting regularly, are they noting everything down? Whether they have any personal interest in investment, whether they're debtor or creditor. You have just learned 5 points already. Out of such a big list, you have already learned 5 points. This much is clear. Now let's talk about books. What all we need to see in books? Books we need to see whether accounts are maintained first regularly. Okay. Accounts are maintained regularly and as per law and regulation. Accounts should be maintained as per law and regulation. Then we have to see receipt and expenditure. Whatever is being done is correctly accounted. It's correctly shown. Plus used for objects of the trust. Used for correct objects. Then cash book, vouchers, cash balance is properly maintained and proper custody is maintained. Then again books, all the books, vouchers, accounts were produced to auditor. You are maintaining everything, but if you're not able to give it to me, what's the use? So whether they were able to give everything to me. Then we'll talk about registers. So whether any movable and immovable property register is properly maintained. That's it. Everyone clear till this much? How many points did we do in books of accounts? Accounts regularly maintained and as per rules and regulations. Receipts and expenditure is correctly shown and properly accounted and used for correct purposes. Cash book, vouchers, cash balance properly kept in correct custody and properly in agreement. Books, accounts, vouchers are properly produced to the voucher. And register movable and immovable is properly maintained. So now we did already how many points? 1, 2, 3, 4, 5, 6, 7, 8, 9. Sorry, 6, 7, 8, 9, 10. 10 points already done. Do you think you can remember at least 10 points out of such a big list? At least 10 points you can remember? Okay. Now let's talk about money. What do we need to check in money? Money, firstly, remember that funds are for correct objects. Then, if any money is outstanding for more than 1 year, if you have given loan, if it is outstanding for 1 year, then any money is invested contrary to Act. So Act allows you to spend money only on something. So whether you have invested money on those things only and whether any irregular, illegal or improper expenditure is done. खर्चा इधर उधर गलत चीजों में आपने किया है जिसके वजह से किसी तरीके का लॉस, वेस्ट, ब्रीच ऑफ ट्रस्ट हुआ है. Breach of trust has happened. So these 3 points you remember for money. Okay. These 3 you remember for money. One more. Whether any anonymous donations received or cash donations received. So they are treated properly and they are as per the regulations. If trust has given loan, Sham Sundar, if you have given money to someone and it was supposed to be returned, or if you have sold something, I told you during teaching you an NGO that trust can even sell products. So if something has become overdue, okay. Revolving fund contribution also I told you. Do you remember? Revolving fund contribution that can become overdue. So what are the points in donations? Money related points. पैसा आया है, money has come, used for correct purpose. पैसा गया है, तो overdue नहीं है. So if money has gone, it has not become overdue for more than 1 year. पैसा invest किया है. So if you have invested excess money, it should be as per the act. पैसा खर्च किया है. If you have spent the money, it should not be irregular, illegal or improper. And पैसा आया है, but in cash या anonymous, then it is treated properly. Everyone clear? How many points are done now? 11, 12, 13, 14, 15 points are done. Do you think it's possible to remember at least 10? Do you think इसमें से you can remember at least 10? If you see the book, you'll get scared. But I call this method, this style that I am using, I call this method as grouping method. Grouping method you can use for other theory subjects also where there are big points. Find common points with common heads and bulk them together. So I made all the books related point into one, money related point into one, trustee related point into one. So instead of thinking that I have to remember 15 points, I have to remember 5 points about trustee. I have to remember 5 points about books. And that is how you are able to learn better. So it's called as grouping method. I have given it the name. Maybe there's some other scientific name, but I call it grouping method. Okay. Now, what is others? Others means whatever did not get covered. Okay. So what happens in others? You can check if any irregularity pointed by previous auditor, that you can check if it is complied. Then any special matter you feel you have to bring to the attention of charity commissioner. You can see if anything special is there, that also you can do. So this is the whole answer, very important answer. Do you think you can do it? You can write for at least 4-5 marks in exam now, okay? Screenshot, please. Here, take it. Take the screenshot. My handwriting is so bad in this. Are you understanding it? Because I wrote it a little fast. Are you understanding it, Ashlesha? Write in your own handwriting after the class, okay? Write in your own handwriting. Okay, we are done. Audit of trust is completed. Audit of trust is completed. Can I go to the last topic? Good, Pooja. Very good. You have written along with me. Very good. Now let's come to societies. Societies is comparatively easier. So we'll just go with it. And if you understand trust, it's very easy to understand society. So in society, just mark like this in your own book. First 4 points. First 4 points are compliance. First 4 points underline compliance. Compliance with Societies Registration Act, compliance with Objects Memorandum of Association bylaws, compliance with FCRA, and compliance with Income Tax Act. Done 4 points. Compliance with Societies Registration Act, compliance with your own laws, compliance by FCRA, and compliance of Income Tax Act. Everyone clear? 4 points. Now that the compliance is done, let's come to audit. What does auditor have to perform? Auditor has to check internal control to design audit procedures of donations and expenses. Then you have to check the accounting policies are appropriate or not. Then you have to check the expenses, if they are reimbursed by donors and how they are doing the accounting treatment. See if any inquiry has been done by registrar. See if any irregular, illegal or improper expenditure has been done, or any expenditure which is a waste due to breach of trust or misapplication or misconduct. That's it. So if you remember the trust answer, you won't have problem in this. Society Registration Act, Memorandum, FCRA, income tax. After this is done, create internal control, check the accounting policy, then come to expenses, inquiry, whether any illegal, irregular, improper expenses, and whether any expenses that has caused wastage or breach of trust. That's it, we are done. I'll do the screenshots at the end. We are done, actually. We are at the end now. We are at the end. That's it. We are done with the chapter. Very interesting chapter, very different than most of the other chapters. Did you enjoy the chapter? All of you, did you understood the chapter? We are done with the chapter. Okay, now I'm giving you screenshots quickly. Quickly. First screenshot. Pay attention. First screenshot. Okay. Next. Leasing company screenshot. Quickly take the screenshot. Then hire purchase screenshot. Okay, this is done. Do you want the whole notes of this thing? Cooperative also. Take the screenshot. Legally cooperative society. This is just a diagram. Then do this screenshot. Screenshot number 1 of the notes. Then 2. Then 3. 3. Then 4. 4. Then 5. 5. Then 6. Then 7. Then 8. Then 9. That's it. We are done. Anything else left? We'll quickly do our MCQs for today. We'll do our MCQs for today. Who generally appoints the auditor of a cooperative society under the Central Act? Who generally appoints the auditor of a cooperative society under the registrar? Good. To contribute to charitable purposes, the society must take sanction from registrar, approval from members, approval from RBI, no permission required. Again, A. Good. An inquiry may be ordered by central registrar on the basis of request received. However, no inquiry shall be held unless a notice of not less than how much days have been given? How many days of notice? B. Perfect. First auditor of a multi-state cooperative society shall be appointed by? First auditor of a multi-state cooperative society will be appointed by? D, board of directors, no registrar like a company. Board of directors. A person who's a chartered accountant can only be appointed as auditor of a multi-state. However, a person who is indebted to society or who has given guarantee in connection to a loan to a third party for an amount exceeding dash cannot be appointed an auditor. What is the amount? C. Done. So here we conclude our chapter number 9. I enjoyed teaching you. I hope you also enjoyed learning, and we'll meet next time. All right. If you have any questions, we'll wait for next 1 minute. Otherwise, we'll end the class. So I'll wait here for next 1 minute. If you want to say anything, ask anything, you can do that. Religious trusts are also subjected to audit. Yes. They're a type of trust. They also need to get audited. Okay. I don't think we have any doubts. Technical team, I don't think we have any doubts. We can end the class for today.